Welcome to Trading Lounge and the SP 500 opening bell for the 24th of July. And as you know, we've been looking at this morning, we've been looking at this move, well, coming down through here, which is in 5 waves, and we were looking for this to be part of a expanded flat correction of an A and a B and a C wave down to this point, and then pushing to the upside here. Now, we also just need to be mindful of any short trades as well. So we've got 5 waves coming down towards the 3,200, all right? So we just need to be mindful that we may just get a correction here, and then we may head down again through that point there. So the important thing is here is that we are short below that, wherever that low comes into play. You won't know where that is just yet until we get the rally, but that will be the signal just here to short, because we've got 5 waves down from the high here. So if I've got the expanded flat correction wrong, then we need to be we just need to be on the short side, that's all. Okay, so we're going to take a look at that little leg down through here in a moment. If this market was going to continue all the way down here, then we would need to put this over here and look at this as 1 and 2 here and 3 here and 5 here and 4 here in that case, and that would leave that as 1 and 2 here and 3 sideways for 4 to here, and then 1, 2, 3, 4, 5 finishing off in here if that's going to be the case. So it doesn't really matter which way the market goes as long as we're on the right side at the right time. So we just need to understand this here. So let's just go straight to the tick chart here and look at this. And this will be pretty much the same for the S&P, for the Nasdaq, and also the DAX as well. So for most markets here. So we've this morning. Earlier today, we looked at 5 waves down through here for wave 1 and back for wave 2 here. And then we looked at, well, there's 5 waves in this little structure here for wave 3. And last time we spoke, we were in here somewhere. We were looking for that wave 4 to pull back up to the 38.2% retracement level, so we can just check on that. It's good to check on it. So it covered it fully here at the 38.2% retracement level, which is good to know, because we need to look for little subtleties and changes of things that don't reach or overreach. Then we know when we see another wave 4 in the same leg, then we know that what we can expect. So it's just building that knowledge base up as such. So in this case here, we're looking for, I think we got wave 1 and 2 way up in here, just a small little thing, that little first thing in there, I think that's the case. And then that would leave us 1 and 2 and 3 and 4 and 5 here for this. So this is kind of how I'm viewing it at the moment. So, and that would be, whoops-a-daisy. Let me just clean this up a little bit. We don't need. So we're kind of pretty close to where we need to be with this, I think. I'm just sort of eyeballing it. I can't really see in there. I'll just double check on the 5 tick chart over here, which is not giving me a lot. But I think we're pretty close here, but we won't know until we see a rally here. So, I mean, obviously, if the market got on to 3,220 here, then we're going up from that point, okay? But otherwise, we'll still drift down and we'll get the bounce off this number here. So the main point here is that we'll have this we'll have these 5 waves down through here. I think I need to draw over here, so I'm just going to go back to the hourly chart now. So now we've got a bit of an understanding of this, and we talked about this this morning, and we've drawn over this, so we're just looking at, I'll just put that there. Right, so we're pretty close down here, as you know. So it may extend down here further to this. The other point here too is that well, from the low here, like I mentioned, we're going to be looking at the 61.8%, which is from here to here. So that's still valid here, this little target area here. And we just need to be mindful here that if we do see a move up, let's say if we see a move up, what you need to do is you need to try to work out when it reaches the midpoint here, the 3,250, which is the 50-60% retracement level, then you just kind of got to work out if you've got 5 waves or 3 waves, because that's going to make all the difference. But at the same token as well, you could also look for the classic trading levels pattern, which would be the arrival, the reaction, the first high above the level, and then the ABC pattern here, and then that gives you your setup to the long side over this side over here. And so on up there. If it doesn't occur, well, then you're safe. It just draws a line in the sand at that point. And if it drifts up to here, I mean, basically we want to go short if this becomes the retested resistance here. So also too, if let's just say for a moment we don't get the bounce and we're in a big bear market, or the start of a bear market, and it just keeps cascading down for whatever reasons, it might just come down here and just find itself in here somewhere, and don't need that. Find itself in here somewhere, and just continues to move down through here. Well, then the short trade would also go under here for this as well. So you need that retested resistance there. So I'm just trying to cover all bases, because out of this will come a trend, and we just need to be on that trend. That's all. That's all it is. It's not a big deal about being right or wrong. I mean, it's always good to be right, of course, but we just need to know when we need to be in the market as such. So that's about it, really. Yeah, I think that sort of covers it. Let's just see what plays out. So it's just a little quick update for before the London opening. Okay, cheers.